We will go ahead and get started. People are still joining, which is good and lovely. I do want to let you know that we are recording this. And so if you want to watch the recording later, you absolutely can. And if you would like your face not to be on a recording, then you're welcome to just mute your video. If you would take a moment and look down to see that your audio is muted. If you have a question along the way, you're welcome to unmute yourself and ask, but if you're not speaking, it would be helpful to remain muted. So my name is Jordan Rippey, and I serve on the staff of the Bishop of the Diocese of Washington, and it's a privilege to have you with us this morning. I am hosting, but you really came to see Steve and Penny and Patrick, and we're looking forward to a fruitful and rich conversation. So let me give you a little bit of a sense of how this will work. You are welcome to make use of the chat box if you have questions along the way that you would like to be answered in the Q&A at the end. So if Steve is talking and something comes to you and you don't want to forget it, you can just type it in the chat box and I'll collect all those questions. And if they're not covered during the body of the presentation, then we'll make sure to cover them in the Q&A. We have a lot of time available for Q&A, and you're welcome to ask as many questions as you would like to ask during that time. Steve and Penny and Patrick will each speak for about 10 or so minutes, talking about something in particular, and then the rest of the time will be reserved for Q&A. We know that some of you are from the Diocese of Washington, some of you are from not the Diocese of Washington, some of you are from large congregations, some of you are from small congregations, and so your facts and circumstances, there are some things that are generally, there are actually many things that are generally true about congregations, but then there are things that are specific to your size or type or location of congregation, and we want to be sensitive to that and be helpful in that way. So I'm going to offer a prayer for us, and then Steve is going to start it. So the Lord be with you.
And also with you.
Thank you.
Direct us, O Lord, in all our doings with your most gracious favor, and further us with your continual help, that in all our works begun, continued, and ended in you, we may glorify your holy name, and finally, by your mercy, obtain everlasting life through Jesus Christ our Lord. Amen.
Amen.
Steve. Oh, Steve, you're still on mute. There.
Yeah, it's not very informative if I'm on mute. I'm Steve Gibson. I'm treasurer of the Episcopal Church of the Redeemer in Bethesda, Maryland, and I'm also chair of the Finance Committee of the Diocese. I'm going to make a few general comments about being a treasurer, and then Penny and Patrick will go into more detail on some of the things that treasurers ought to know. We plan to leave significant amount of time for questions, which will give an opportunity to elaborate on specific items that are of interest to you. So, what does a church treasurer do? One succinct description of a church treasurer that I found online says simply, an effective church treasurer disperses all funds received into the church treasury in a responsible and organized manner with funds identified and bills paid when due, so that the ministry of the congregation can be effective. I found also an online description of treasurer qualifications that I liked, which says, the church should desire a church treasurer that exhibits a willingness to work cordially with people and has the ability to be fair-minded. The person selected to be treasurer should also have knowledge of the working organization of the church. The church treasurer is to be one of the elected leaders in the church. The character of the treasurer should reflect the highest Christian ideals. The experience and background of the person holding this office should give confidence to church members that the financial affairs of the church will be carried on in a fair and trustworthy way. The person selected to be church treasurer should have knowledge of accounting procedures or the willingness to learn accounting procedures. So, a place to start understanding your responsibilities as parish treasurer is with your parish bylaws. Canon 47 of the Episcopal Diocese of Washington states, the bylaws of each parish shall provide that the vestry shall elect a treasurer. and that the bylaws shall prescribe the qualifications, term of office, authority, and voting rights of the treasurer. As an example of a bylaws job description, the Church of the Redeemer's bylaws contain the following. The treasurer shall be responsible for oversight of all parish funds, securities, receipts, payment requests, disbursements, and deposits, and for proper creation and maintenance of financial records as prescribed in Canon Roman numeral 1.7 of the Episcopal Church. The treasurer shall render to the vestry at its regular meetings or whenever the vestry may require it, an account of the financial condition of the parish and of all transactions involving parish finances. The treasurer shall assist the rector in preparation of the parochial report annually. The Redeemer bylaws also provide the treasurer is elected annually, that I have a voice and a seat at vestry meetings, but no vote unless I'm a member of the vestry. I am not a member of our vestry, so I don't vote, but I do attend, give the treasurer's report, and participate as part of the church leadership. So, with these basics out of the way, I would like to share with you a few observations about being a treasurer. Penny and Patrick will provide you with more specific advice, but I want to give you some flavor of the experience. First, relationships are important. If you are new to the role, I suggest you meet with your rector and senior warden to discuss expectations and your working relationship. And of course, meet with your predecessor as treasurer for a full debriefing on the records, the procedures, the policies, the issues, everything you need to know to maintain continuity in your transition as the new treasurer. And remember, the bookkeeper is or should be your friend. You should develop a good working relationship, a good channel of communication with whoever keeps the books, so that you are available to answer their questions, they are available to answer your questions, and you can work together cooperatively to manage the accounting and finances of the parish in an efficient and effective manner. Second, transparency and reporting are important. The treasurer plays a vital role in keeping the vestry informed of the financial situation of the parish and assisting the vestry in maintaining the financial viability of the parish. The treasurer's stewardship role is not fundraising, but rather is promoting prudent management of the church's resources. A clear element, or a crucial element, is clear and timely reporting to the vestry, normally at monthly vestry meetings. The key here is effective communication. The vestry should be able to read and absorb your report without flipping through pages or doing math in their heads to understand the numbers. Keep it simple, just the facts, dollars and cents. In my view, there's no need for percentage of budget, percentage of year, period to period comparisons, etc., in your written report, all of which tend to detract attention from the actual financial figures. Of course, everyone will have a different approach to this, but I suggest you try to limit your report to a couple of pages. The format might well evolve as you learn from the ministry what they regard as important. Similarly, transparency in communicating the financial situation to the congregation is very important. At Redeemer, we publish a summary version of the P&L statement in the parish newsletter every month. We include the budget categories, but not the line items underneath, mainly in the interests of space in the newsletter. But we do invite the congregation, any parishioner who's interested, to contact the treasurer, me, if they have any questions about the financial situation of the church, and I respond. Third, treasurer and finance committee chair are two separate jobs and should be performed by two separate people. The responsibilities are different. Two heads are better than one, and two sets of eyes are a good fiscal control. The treasurer should be on the finance committee, but should not be chair of the finance committee. Fourth, the treasurer should not be the bookkeeper. Someone else should have responsibility for recording financial transactions, for maintaining accounts, and for preparing checks. My personal recommendation, if the parish can afford it, is to utilize a professional bookkeeper on a part-time basis. Good bookkeeping is a prerequisite of good accounting, and the accounting reports are the foundation upon which the treasurer must rely. Effective accounting also involves having an appropriate chart of accounts and the proper utilization of accounting software. And I think Patrick may be getting into this a little bit in his comments. Fifth, the treasurer should support a tradition of donations to the general fund rather than the establishment of separate funds, except for clearly distinct functions or significant memorial gifts. Try to avoid a proliferation of separate accounts, separate funds, and other separate stashes of money. And when separate funds, such as donations for major specified purposes, do exist, be aware that they are subject to special accounting requirements. Again, this is something I think Patrick might touch on. Sixth, all financial transactions of the church, inclusive of all activities conducted in the name of the church, should be recorded in the church's accounts. This is important for both internal control purposes and for transparency of church activities. Seventh, and finally, the treasurer should be a financial realist, able to dig into rosy sounding scenarios and think through the implications if things don't go as planned. While churches need to step out in faith, they also need to think about financial sustainability in order to fulfill their mission. So, those are my initial thoughts about being a treasurer. After Penny and Patrick give you their perspectives, we'll look forward to answering your questions. Thank you.
Thank you, Steve. Penny, I think you are up next.
I am on. I'm Penny Winder. My home parish is St. John's, Norwood, where I have been treasurer there. I just finished a stint on the Diocesan Council, and I'm currently on the Diocesan Finance Committee. And if any of you are new to being treasurers and you just heard all of Steve's bullet points there, are you ready? If you're ready to resign, I'm not surprised. It's a lot to think about. A treasurer, sometimes you'll say, well, I can pay the bills and I can write the checks and I can do this, but that is just scratching the surface, and you're not the one that should be doing that anyway. I want to endorse Steve's suggestion that every parish should have a bookkeeper in addition to the treasurer. The person that's posting the information is not the person who should be absorbing it, analyzing it, reading it. You need to have some separation of duty. So, and you don't have, if you can have a bookkeeper that's volunteer, it doesn't have to be a paid position. It just needs to be a separate person. My ramblings are going to be a little bit about some pitfalls that you might hit in the treasurer's position. And so that this is in no particular order. Number one, if you look at your parish, every parish is different. There's no way for us to have a standardized chart of accounts or anything else, basically, because if you look at each parish, you take your money in differently, you have different funding things, you have different mission statements. So every parish is their own entity. However, that being said, every parish needs to follow accounting guidelines. It doesn't matter what you're doing, how you're doing your money, but you've got to follow the guidelines because you need to have an audit every year, and those guidelines have to be followed that way. If you don't know what they are, look in the church manual, the business manual. It's an excellent source of information. And then I'm going to give you a couple of things here that I've found along the way. Oftentimes a parish will have a loan. You might have a loan on a piece of property. And when you make that monthly payment, the payment goes part to the liability part of the loan and part to the interest part of the loan. So I worked with a church at one point, and they put in their annual budget the interest part of the loan. So when they were looking at their budget each month, they were right on target. You know, this is this and this is this and that. What they were forgetting is the cash flow of the cost of the liability part of the loan. And so that was not being recorded in their P&L. And they became very seriously cash poor because they weren't accounting for the expenditures the way they should have been. So I would just caution you, if you do have a loan and you're doing a budget, you can put the liability part in there. You just transfer it out. And Patrick can talk about that if you have questions. But just make sure you're capturing all the costs when you do it, because if you don't, you're going to have a cash flow problem. Steve mentioned the former treasurer. Sometimes the former treasurer has been really good. Sometimes the former treasurer has left some few things to be done better. I worked with a church one time and they were having cash flow problems. The new treasurer came in, couldn't understand why there was literally no money in the bank, opened the drawer, and the former treasurer had been putting checks that were cut for payments in the drawer and then cycling them out as they had the cash. So it was that was not somebody's that former treasurer. I would not particularly want to follow their guidelines. I think that that's not best accounting practices. So I think you need to be careful. If you want to get advice, make sure that you know who you're getting advice from. Probably every church has had a capital campaign at some point in their lives. One of the things about capital campaigns is that those funds are meant for the capital campaign. So I would urge you, and I'm not urging setting up a gazillion bank accounts for every little oddball thing that you raise money for, but I think a capital campaign is an exception to that rule. And you do want to put the money in a separate account because it's a restricted account of money. It's only to be used for the capital campaign. Excuse me. And if you mix it with your operating funds, you could find yourself in a world of trouble if you've used those funds for something other than what the donee designated them for. So I would caution you about how you record income and expenses in a capital campaign. And then there's another whole thing about restricted funds. A lot of times somebody will give a church money and they'll say, well, this is for the altar guild, or this is for the flower guild, or this is for this. And so you set up all these little funds, meaning that those funds are only supposed to be spent for that particular activity. And oftentimes they're not all used for that. And sometimes you can go back to someone, you say, well, you had this for the altar guild, but we didn't use it all. Is it all right to use it in the general fund? There's nothing wrong with going back to a donor and saying, we appreciate your donation. And, you know, is it okay if we use it for some other focus? And oftentimes you'll get a yes. And if you don't, then you have to keep it set aside. But, and so then I'm going to hit the balance sheet. Most everybody can understand the profit and loss statement, your income, your expenses, whether or not you're hitting it. That's where your budget goes. Becomes a little bit more complicated when you look at the balance sheet, where you have your assets and your bank accounts and your liabilities on there. And oftentimes when you have the balance sheet and you usually will have your church building and your property on there as an asset, but oftentimes churches forget that those are just the super big assets. You have all the contents of the church. You have, the furniture, the computers. You have the things that the altar guild uses. You have all the organ, if you have had an organ or a piano. So there's a lot of big things sitting in that church that have a lot of value that should be recorded in some fashion. But in addition to that, you need to be careful about your insurance policies to make sure that your insurance policy is covering the cost of replacement should you have a fire or a flood or something. So I would urge you to take a really close look at the fixed assets in the church. And the treasurer doesn't have to do that themselves. They can appoint a committee or 2 or 3 people to look at it. come back with values and look at the insurance policy to make sure if there is a problem that you can have it covered. Another thing, and churches run into cash flow a lot. It seems that it's, you know, it's just the nature of the beast. Sometimes it's only because of the way that the income comes in. People pay their pledges late or early, and then there's a dip sometimes when you don't have the cash flow that you want because it's not steady. But I would urge you that whatever if you have cash flow problems and you have to not pay a bill, you always have to pay the pension and the health insurance premiums. Those are critical. And if those fall behind, the sum of money adds up very quickly. So I would, you know, those would be the first things out the door with, you know, if you have a loan or something, but make sure that your clergy and your staff are covered with those two benefits. And then clergy payroll is not the easiest thing to calculate either, because oftentimes the FICA and the Medicare, sometimes they want to pay it themselves, sometimes the church pays it, sometimes housing allowances are complicated. So if you don't have a clear understanding of how to record and the payroll, I would urge you again to use a payroll service that is well versed in clergy payroll, because they will know how to make those calculations. They will make sure that all of your quarterly and annual reports are filed with IRS. And it's a huge load off of you and the bookkeeper not to have to stress about that. So it's not all that expensive when you compare the cost of a late filing with the IRS or a misfiling on a payroll tax responsibility. And another thing is, you know, I love the idea of an easy report to the vestry that Steve alluded to, because you start talking money and most people in the vestry, the eyes start glazing over and say, well, when can we talk about the vision, what we're visioning here? This is a church, you know, and I hear that a lot. This is a church. Well, yes, it is a church, but you have to remember that no matter what size your budget, it's a business that has to be dealt with. You have to make the numbers work. You have to pay the bills. You have to have a certain amount of money. You have to follow GAAP guidelines. So I would try to make your vestry educated about what it is that they're looking at. And you may even consider taking the balance sheet at some point, you yourself, and making sure every one of those numbers ties together and you know what that number means, because you're going to need to have all that information for an audit. But maybe you could do a little training session with the vestry and have them kind of look at the balance sheet, just something easy. Now, it doesn't have to be overblown. Or you could take the balance sheet and say, well, this cash account covers this money and this cash account covers that money, and these funds are restricted and why. Just a summary. And try to educate them, because the better educated they are, the better they are to make decisions about what your parish wants to do going forward. So yes, you're a church, but yes, your fiduciary responsibilities as a treasurer goes past just looking at what we want to do as a vision. And I think and I'll just go over one more thing and then we'll save it for questions. Oftentimes, if you're having a difficult time having your pledges match what you want in your budget, sometimes the vestry say, well, we'll just make up the deficit out of our endowment funds. No, you should avoid that at all costs. That's the last place you want to look for money to balance your budget. Because when churches do that, and we've seen this happen more than once on the finance committee, they diddle away, they a little bit here, a little bit there. And the next thing they know, they have no cushion and they are really in trouble. So unless you have, and you could make a plan that maybe you could use, say, a percentage of the interest that you make on your endowment. But if you had to use a little bit of money, that's what the diocese does with the SOPR fund. They take the interest, they calculate it over 5 years, they extrapolate part of it and use it for the budget each year. But that's a slippery slope too. So I would caution you to be careful about that. Just really try to guard those endowment funds as best you can. I'm going to let it go at there. I've chatted long enough. I'm going to turn it over to Patrick, but we will have questions at the end. So thank you for listening. And
Thanks,
Patrick,
Penny.
Ron.
I'm going to interrupt right before Patrick. A couple of folks have asked about payroll services that are well-versed in clergy compensation. Paychecks, which I'm typing in the chat box right now, is one that many congregations use. Are there others that Steve, Penny, or Patrick use or know?
Yeah.
You could use ADP.
ADP, yeah. Mhm.
I would stick with the big ones. I wouldn't find some little accounting firm that sits on the side. You hear on the radio, oh, we can do your taxes. I'd be really cautious about that. You want somebody that's been in it for a while and tracks all the changes and the IRS regulations as they move along.
Mhm. Yes, your smaller organizations often are not particularly up on clergy compensation guidelines.
Right.
Very well, thank you.
There's two, and so I would stick with one of those two probably if I had my choice.
I agree.
Okay.
Thank you, Penny.
All right. You're welcome.
My turn?
Yep.
Okay, good morning, folks. I'm Patrick Summers. I have been on the Finance Committee off and on for at least 6 or 8 years. As best as I can remember, I'm a member of St. John's on Lafayette Square. I was in corporate chief financial officer for 2 media organizations for about a 25-year period. I started my own accounting firm, Summers and Associates. I specialize in accounting and audit for small to medium-sized organizations, specifically nonprofit organizations, a lot of churches. I work with a lot of churches, and both the Diocese of Washington and the Diocese of Virginia. Just to get a general start, general rule of thumb, running your church, the finances of your church is very much like running a small business and trying to run it as best as you can. You have money in, you have money out. Churches have a few caveats that are special and unique to them because of donor restrictions, but I'll get to that in a minute. One of the issues I typically run into when I'm starting particularly an accounting or an audit client in the first year is we're looking at their general ledger, meaning their chart of accounts. And they're asking, well, this chart of accounts, it's a mess, so we need to fix it. Or how do we set it up? We're starting with a new software. Well, your chart of accounts should generally reflect your business's or your church's operation. Your revenue accounts should reflect the revenue categories as recognized and needed by the institution, as well as the expense accounts should be organized and set up as needed by the institution. You don't want to have too many, but you don't want to have too few. Common sense is a good rule to follow here. From the standpoint of setting up revenue accounts, I'm going to jump to the concept of, to the issue of restricted revenue versus not unrestricted revenue. There's a lot of confusion in nonprofit accounting, particularly on the you're dealing with small to medium-sized organizations, and the distinction between restricted funds, operating funds, and restricted funds. And your chart of accounts, if set up properly, will help you come to some good points of clarification. A restricted fund is a fund that is set up and you accept donations from individuals or outside institutions or parties that have a specific donor restriction. And that restriction is accordance with what your treasurer or your vestry or your management, whomever that might be, has defined. And let me make that distinction. For example, at the end of the year, when folks have given to the Flower Fund or the Altar Guild or the United Thank Offering or the Shrine Mont Fund or whatever, the church's general policy might be that everyone should know is that they accept those donations without restrictions, meaning at the end of the year, if you brought in $1,000 for flowers and you spent $900, the general assumption is that $100 went back into the general fund. And that's okay. That's fine. You can have 8 or 10 or even as many revenue accounts as you want, as long as the donor understands that this is a regular activity of the church. At the end of the year, any money left over goes into the general fund. Those funds are typically money in, money out. That's usually the way they work. in most cases. Okay. On the other hand, if the church is getting ready to go through a building program or a capital campaign where you're raising large amounts of money for projects that typically extend into the next period, meaning the new year or the next several years, then the church powers that be need to establish what's called a restricted fund, and the money given for that particular project or cause must be accounted for and spent only on the purpose for which the fund was intended, and hence what the donor intended. The two should go hand in hand. And as Penny alluded to, there are several ways to account for that. The biggest confusion I run into is not the fact that some churches, particularly for the restricted funds, where you're going to bring in some what I call substantial bucks, for lack of better terms, that you have a separate checking account for that. And I work with several churches who have set up, they might have 4 or 5 accounts other than their general operating account, and they account for special causes. Doesn't have to be capital campaign or building. There are others. I have one church that has a feeds the homeless. So they record revenue and expenses associated with their kitchen, which they run. I have another church where a donor has given substantial bucks for scholarships for seminarians or for members of the church to go off to institutions and get various sorts of training and ministry. Those are very legitimate reasons to set up funds, special restricted funds. Okay, well, given the purpose of the fund and the purpose of the donation, you're really bound to set up a restricted fund in cases like that. Okay. So your chart of accounts should reflect revenue accounts that will accommodate all these needs, which I've just described. Moving on. Oh, and also the teller's weekly report should adequately reflect the revenue chart of accounts on your general ledger. In other words, what the tellers collect and record and what you put in the accounting, in the general ledger and in the bank should be pretty much be one-on-one. Okay. Next thing, let's talk about a little bit about expenses. Most churches are pretty good at getting expenses authorized by the authorizer, which needs to be a separate person from the person, either the cutting the check or which needs to be a separate person from signing the check. Ideally, if you're still writing hard copy checks, you need 3 people to keep your separation of duties. But most churches are using bill pay. We love bill pay, don't we? I do. You get a person. It streamlines the operation, but you do lose 1 or 2 links in your separation of duties. The person's authorized to authorize disbursements should be the separate person who sits at the computer and actually pays the bills online, and a person who periodically checks those transactions online should be yet another person. So you still ideally need 3, with the idea that the second 2, the person making a disbursement needs to be separate from the person who is checking the disbursements made preferably on a weekly basis. Okay. Once again, your chart of accounts should be set up so that if you're paying expenses from your restricted fund, then the chart of accounts should have ideally should have separate account numbers for restricted fund expenses, as well as I mentioned, have separate account numbers for restricted fund revenues so that you can more easily chart that. And ideally, just as Penny said, if you have 3 or 4 substantial restricted funds, ideally, if you could have a separate checking account, so that at the end of each month you transfer money given for the fund into that separate checking account, and then you cut checks for that restricted fund from the separate checking account, then that's a much easier way of tracking the ins and out of the separate funds. Okay, restricted funds cause a lot of confusion because what you actually have is most software, and we'll talk about software in a minute, produces an income statement. One. QuickBooks will produce 1 income statement, okay? But for restricted funds, if you have 4 restricted funds, then you need 5 income statements, okay? And that causes a lot of confusion at the church level. QuickBooks, let's a little bit about software. If you use a proprietary software for a church and you set it up properly, then it will adequately track operating money in and out and restricted money in and out, if you set it up properly. Okay, QuickBooks, any accounting software will accommodate restricted fund accounting, but you need to go through a few extra transactions at the end of each period to make sure that the operating fund and the restricted fund accounts all accurately reflect the activity in and out of those accounts. And what causes even more confusion is if you have separate checking accounts for your restricted funds, at the bottom, your balance sheet needs to reflect separate net asset balances for each fund. They'll automatically do that for the operating fund. That's the way the world works. But ultimately, at the end of the month, your balance sheet needs to reflect the net income at the end of the value of the net assets in each account listed by each fund on your balance sheet. And once again, if ACS or Realm, your church software is set up properly, that'll work. If you're in QuickBooks, you have to know how to make adjusting balances at the end of the month. And then Penny and Steve also made a reference to information to your vestry. Ideally, at the end of the month, you want financial statements that are going to be in the format of generally accepted accounting principles, like any small business or medium-sized business. You might create from that information, once it's accurate and checked and reconciled, what I call a dashboard report for your vestry. So understand what your vestry can read and grasp it from a financial standpoint and reporting standpoint versus that which might be a little bit challenging for them, and try to set up a dashboard so that they can have a pretty good idea of what their activities have been for the period and what their closing statements have been at the end of the period. As an auditor, I'm going to go in and look at your balance sheet, and I am not, once I do testing for your income statement or statements, depending on how many funds you have, and those check out, meaning I do a testing sampling of your revenue, look at all the backup to make sure you have backup. Very important. You have to have paper backup for every bit of revenue and every disbursement when you're running an organization, particularly a nonprofit organization. Crucial. When, and this is just a quick little minor issue, when you're charging to a credit card, be sure that you have the backup for every credit card charge. When your statement simply says Amazon, that is not backup. In other words, that doesn't tell you what you spent the money on. And I have a church that ran into major problems because when it came time to audit, their expenses were not auditable, and they failed that part of the audit. They did okay in the end, but nevertheless, that was a problem because there was no audit trail to know specifically what the expenses were for. Okay, so but anyway, as an auditor, I'm going to verify the balances at end of the period, typically December 31st, balances in your checking accounts, in your savings accounts, and in your investment accounts. So you want to have your proper backup and statements, third-party documentation for all of those accounts. I'm going to look at how you're recording your, nightmare in most churches, your fixed assets, specifically land, buildings, and furniture and equipment. Not that big a deal in nonprofits. Only in that the proper value and the proper depreciation affecting your bottom line is not as crucial. Not that you don't want to be responsible, because you're not paying taxes on the bottom line like for-profit corporations. That's why big corporations like Enron get into major criminal sometimes issues with the valuation and the depreciation associated with major assets. Churches don't need to worry about that. But what you do want to know is most vestries would like to see the value of their land and their buildings and their fixed assets. There are a couple of ways to do that, since this is ultimately a private audit as opposed to a public audit, which you can have, but that's a different topic. So in some churches, I will value all of the land and buildings at tax assessor value, which is easy to get in the district and in PG County and in Montgomery County, or in the various Virginia counties. Or I might purchase it at cost if the church has the appropriate records for actual cost. Most churches in the Diocese of Washington do not, because if your church building is 200 years old, you have no idea how it costs. You can certainly assume that it's fully depreciated, but the bottom line is that information really doesn't serve a great purpose. And we can talk about, I'd be more than glad to talk about this whole concept issue, which really doesn't need to be that big an issue in church accounting, but you need to be accurate with the numbers you present, and you need to be consistent reporting from year to year. So I look at that. The church needs to have backup, as Penny said, for any debt the church has, anywhere from unpaid bills at the end of the period to credit cards to mortgages that are due, to equity mortgages, equity lines, or other credit lines that are and loans that are due. One of the biggest questions this year was, you got a PPP loan, and they say you want to take it as revenue. Well, the PPP loan is not revenue until it's a loan and recorded as a loan until you get documentation that the loan is forgiven. Just FYI, in case you wanted to know that. Okay. And then at the end of the period, I'm going to check to make sure that the fund balances for each fund are accurate based on opening balance, revenue, expenses, and any transfers between funds, which you can do given certain circumstances. So that's enough for now. And I would like to go, if there's anything else I should mention, Steve or Penny or Jordan, let me know. That being said, back to Jordan.
Thank you, Patrick. We've had lots of chatter in the chat box. And so if you haven't taken a look at that yet, you are welcome to, but you don't need to, because we'll include the kind of highlights of things that you would need to know. We'll include that in your after workshop packet. So what we're going to do now is move to Q&A, and this is going to work in a couple of ways. And we had a number of questions submitted ahead of time. And so I'm going to ask those questions to the panel, and someone will answer, and someone might tag on an extra answer. And if you have a question, you are welcome to either type it in the chat box and I'll read it from there. Or if you'd like to come off mute and just ask your question, because it's a little harder to type it in than just to say it, you're welcome to do that also. Now I'm going to kick off with some questions that we got ahead of time. And the first is this: should there be broad established accounts like facilities and maintenance with sub-accounts? So I'm going to put that in the chat box. Should there be broad established accounts like facilities and maintenance with sub-accounts?
May I?
Please.
Yeah. It depends on how you want to manage your institution. Typically, those do have sub-accounts. For example, general repair is one. Sometimes churches will want to know what they're generally repairing. In other words, if they want to know, we're dealing with roof issues, they're not capital campaign issues, we're going to expense it in the same year, but we want to know, what are we doing to repair the roofs as opposed to resurface some of the floors, revarnish the floors, not replace the floors, but revarnish them. You can create sub-accounts as you feel needed, as necessary for good management of your institution. Most sub-accounts, I wouldn't create more than 5 or 10 at most. In an area like facilities and maintenance.
Yeah, I'm not sure if you're thinking about utilities in that question, but I think you should actually make your utilities separate, because you want to track the expenses, and oftentimes that's a place that the vestry can go and say, well, let's look at the gas bills or the electric bills. So I would suggest that you can track the utilities.
Yes, and I absolutely, Penny's absolutely right, in the sense that your utilities you usually have very little control over. Putting off the resurfacing the floor, putting off that, fixing the roof, it's not leaking yet, but we know it's going to, that you can put off. Utilities you cannot. You got to budget it and just realize you're going to have to pay for it, unless you want to sit in the dark.
And also in the heat in July, it'd be a little.
In the heat in July, and have your rector screaming over the room because there's no electricity for the microphone system.
Right. The next question is, how should we deal with memorials? So I think that the origin of this question perhaps is a person who passed away, and so we are making donations in honor of that person. I'm not sure if that's what the question means, but that's sort of my sense of it.
May I again? Memorials come in. What the church wants to do from a management standpoint is recognize to the donor as well as to the congregation the fact that money was given in memory of someone. Okay, there's a ministry there associated with personal and pastoral care when it comes to memorial money that's given. Okay, the memorial fund can be defined as the vestry decides to define it. They might say the memorial fund, thank you very much, we're going to use it for general operating purposes, and we're very appreciative, and we certainly remember Aunt Susie or whoever. Okay, or the memorial fund might specifically go into a particular ministry if the church chooses. For example, our memorial fund is used specifically for outreach. Our memorial fund is used specifically for the upkeep and maintenance of our graveyard or our columbarium. Those are purposes that are a little bit warmer and cozier to the donors. You can use, if the vestry wants to, they might say the memorial goes into our general fund for the general operation of our church. Well, you can do that. There's no problem. That's fine.
Thank
I
you.
think it goes to individual churches like you're talking, Patrick, because, it is a vestry decision, because I know at St. John's, the memorial money that comes in is actually put in a separate account with a separate line item fund, because it can only be used to enhance something in the church or buy prayer books or something along that line. So-
Worship, for example. Yeah.
Worship, yeah. So that's kind of an individual parish decision of how you treat the memorials, I think.
I think
Yeah.
that there's an additional distinction that we might bear in mind, at least we do at Redeemer, and that's between designated funds and restricted funds. Basically, there are some activities where you want to have a carryover of the money for a purpose from one year to the next. And we use fund accounting for that so that we don't have to take it out of, treat it as an expense at the end of the year, put it into general revenues and make those adjustments every year. We just keep track of that account and how much is in at the beginning of the year, how much we add, subtract, and how much at the end of the year. If the donor said, I'm giving you this money for this purpose, that's a restricted account, and that money must be used for that purpose. But the board or the vestry can decide, well, we would like to set aside a certain amount of money for the rector's sabbatical, and we want that to build up over time. So we will establish a designated fund, contribute a certain amount into that fund every year, and it can grow from year to year without going through the P&L. Yeah, Patrick.
Yeah, a designated, I didn't mention those. A designated fund is usually a separate report recognizing an opening balance, revenue and expenses, but it's a subset of your general operating fund. And the revenue to a designated fund is only designated by the vestry. A designated fund is persons can give to the cause, but they need to realize that money in and money out, and money from at the end of the report goes back and is really part of the general operating fund and completely at the discretion of the vestry.
This raises another point about funds. At Redeemer, we have 3 financial accounts. We have a checking account. All checks are paid out of the checking account, no matter from restricted fund, for designated fund, for unrestricted fund. Every check that's written is paid out of our checking account. We have a savings account in which we put the money for our building reserve, because we're going to collect a lot of money. We're going to build that up a lot. So we figured we're going to put that into a savings account separate from our operating account. And then we have a brokerage account into which we receive stock donations. If somebody wants to contribute by giving the church stock rather than money, there's a tax benefit to the donor, and we accept those transactions, that stock, into a brokerage account. We immediately liquidate the stock. We don't want to be investing in the market. It's a very conservative approach. Some others might decide, well, they're going to grow in value, so let's stay with the stock. We liquidate them, but we just leave the money in that account until we need it for operations. So basically, number one, we don't have a separate bank account for every separate fund, which I think creates a lot of paperwork and a lot of reconciliation work that maybe you don't want to do. So we keep the cash management simple, and we deal with these issues that Patrick was talking about in the accounting, and it can all be done in the accounting. And that's one reason why I suggest it may be worthwhile to have a professional bookkeeper who can do this kind of accounting and can give you a clean set of accounts that are cleanly auditable, rather than saying, oh, we're going to put this money in this bank and this money in this bank account, and you have 6 bank accounts because you have 6 funds. It's not necessary. You can have 6 funds and 1 bank account and pay all the checks out of that bank account. And when you pay the check, record it against a particular fund.
Yes, and might I add, as long as you don't need, GAAP does not require, and you don't need a separate checking account for every fund, restricted or designated, but you need to be sure to recognize the opening balance in the fund, not an asset, a cash or investment account, but the fund itself, revenue to the fund and expenses to the fund, which in your case, as you're describing, Steve, are or accounting issues. They're not necessarily transactions in and out of separate accounts. As long as, and that gets into fund accounting, bookkeepers as a rule at the church level are pretty good at labeling the transactions. They're not necessarily pretty good at closing and properly reporting the net assets in specific fund accounts. But when I go in to do an audit, a bookkeeper, if they properly recorded money in, money out, between the two of us, we can usually get their financial statements in order. And Steve, in your case, it would, in a case like your parish, if it's not already in order, which it probably is, that it's usually not a daunting task.
Can I just throw into that when you look at the balance in your, if you do like Steve does and you have X amount of dollars in your checking account and everything flows through there, you have to remember that money sitting in that checking account is already been allocated or designated for some other sub account. So it's not that much money that you have to spend on your bills because there's a certain amount in there that's already spoken for, so to speak. So just
exactly. Yes.
that what you say is cash is not necessarily what you can go and write a check for.
That's correct. Not just for general operating. That's correct. And sometimes you, in certain churches, they'll have one checking account, but they'll have it broken down into sub-accounts to reflect a cash balance available that reconciles somehow with the actual balance in the fund itself.
Yeah. Well, again, because I believe in keeping things simple, if you look at the example of a treasurer's report that is available from this training, it has our report has two parts. It has a P&L at the top, which is basically cash in, cash out. And then at the bottom, I don't have a balance sheet. I just have a cash report. And the top part of it lists our three accounts, 100,000 here, 20,000 here, 30,000 here, total 150,000. Then under that, designated accounts. Here's how much is in each of the designated accounts. Here's how much is in each restricted account. Subtract that from the cash in the bank, and that's how much you have for operations. That's
general operating, unrestricted money. Yeah.
Yeah.
Unrestricted money. Yeah.
And I have a few other clients.
You total up all your cash. How much do you have? You subtract all the things that are spoken for through designation and restriction, and that's what you have for your operations, your general fund.
And you keep it all. And you keep it all in one account, in one bank account.
Yes,
Yeah.
one bank. Well, three bank accounts. We have a savings account, we have a brokerage account, and we have a checking account.
No, got it. Yeah.
Can we have a sample of his statement?
Yep.
Excuse me?
So in the packet that you'll get after the workshop ends, we will include or have included a sample set of financial procedures for a congregation that Steve drafted and that they use at Redeemer, and also a pro forma report that you as a treasurer might use to communicate to your vestry in an efficient and not complicated way. So you'll see that.
Okay, thank you. Thanks.
Okay. Gary had a question. They use QuickBooks in his congregation, and he is wondering about how to make sure that closed monthly statements are not changed in a later period.
Good question.
I know that QuickBooks will allow you, even older versions, will allow you to close a period and not let you post a transaction until you manually reopen the period. Down in settings or somewhere, one of those little, all those little pull downs, or, all those struggles we have with software. It's one of those. But you can do that. You can control that so that you consciously are posting in a period that had previously been closed.
Is that something that
That's one of the QuickBooks is a great software because it's not too complicated to use. but it's not a great software because you can go back and make a lot of changes in a prior period. So you have to be really careful about how you make any adjustments once something has been posted.
Yeah, QuickBooks will, I know, will let you will give you a warning. At least I know that. I know. I thought you could close a period. But anyway, Gary, did you have a question?
Well, I'm just thinking about, excuse me, if there is a feature on QuickBooks that would keep me aware of that change having been made or won't allow it to be made, how do I start that? Is that automatically in the QuickBooks? I don't think so.
Not that I know of, no. But I tell you, one thing you can do as it's more of an accounting skill in the sense that every now and then go back. For example, you closed out 2019. Is that at the end of 2019 you had an audited financial statement, and your system accurately reflects the balance in every one of your balance sheet accounts, including restricted and unrestricted funds. That balance sheet should not change anytime into perpetuity. If a month from now you go back and open up the December 31st, 2019 balance sheet and the numbers are different, that means someone made some changes. And I would ask, as a treasurer, I would certainly ask questions.
Thank you.
Mm-hmm.
It looks like the next question is from Rashida. What are best practices to prepare for annual audits? Steve and Penny, I think maybe everybody mentioned audits and the canonical requirement to have an audit. What are some best practices for preparing for that?
Well, for starters, I would say running a well-organized operation. It all comes down to having a good bookkeeping system, a good chart of accounts, accurate recording of transactions. If you have a clean record, I think that's the most important preparation. Patrick?
Yes,
what do you think?
along those lines, and as I listed earlier in my presentation, your auditor is going to go through and look at every line item on your balance sheet once they've cleared that your income statements, plural, are accurate. Okay. Well, and I run into this, if you have a bookkeeper or a treasurer or anybody in management at your church that looks at a balance sheet but doesn't know what certain balances are, then that's a problem. You need to know. So the auditor is going to come in and ask you about every line item, and if you don't know, the auditor is going to go, okay, let's talk about this and let's see what we can do to figure out what this is. And usually what I end up doing is adjusting to either correct it or to eliminate it from the balance sheet, because it's something that's been on the balance sheet for 10 years and no one in the past 8 years knows what it was. So that's your first, that's your first. Yeah.
I was just going to say, each month, if you can be really cognizant of every line item on the balance sheet, and if you're comfortable with those balances at the end of each month, by the time you get to the end of the year and you have your documentation, you don't have to worry about your audit. You're already in pretty good shape. And
absolutely, your accountant should be reconciling every cash account, every investment account, and every liability account. Should balance with some or reconcile with some third-party documentation. Typically, the bank statement or the investment company statement, or the credit card statement or the mortgage statement. Those are the 4 or 5 primary documents that you should have for backup.
Thanks. Someone mentioned, or maybe more than someone mentioned, a fiduciary duty or fiduciary responsibility. Can you describe what that is from the perspective of a treasurer?
Patrick, you want to fly that one?
I was going to defer to Steve. I'm deferring to Steve.
Well, yeah, I simply stated, it means money shouldn't go missing. But you also, that's it. It's integrity in the account. But there's, in addition to fiduciary responsibility, there's a stewardship responsibility. And I would stress that because you're not just a bean counter. you also are part of the leadership, and you are the part of the leadership that has primary responsibility for making sure that you have a financially viable and sustainable church. One way this is reflected is if you have financial challenges in your church. My view is that if you are facing financial challenges, those should be openly discussed with the congregation. And the treasurer may be the appropriate person to lead that discussion. Penny talked about nibbling into an endowment. And one reason you shouldn't do that is because you're going to eat up your endowment. The second is that you don't teach the congregation the importance of giving. In other words, your budget should be self-sustaining on an annual basis. The people who are participating in worship, who are in your congregation, should be supporting the mission of the church. And if they're not, you don't have long-term viability, even with a big endowment on day one.
Steve, I think that's a really important point, that stewardship is it is a spiritual practice, and it is a relevant issue beyond just how do we pay the bills, right? And that's a place for discipleship and growth among people in your congregation.
Yes, and something that that Penny pointed out, there are certain fiduciary responsibilities you have that are in fact legal in the civil sector. When you disperse a payroll, you are legally bound to pay your payroll taxes. When you deduct taxes from someone's paycheck, it is the law that you must submit those taxes to the Internal Revenue Service and to the state and local jurisdictions. You don't have a choice. Okay, Penny, there were some other funds that for which you actually have a legal responsibility in terms of oh, excuse me. If the church defines a restricted fund, promotes the fund by the way they've defined it, people give donations to the fund with the restriction as you have defined it and as they have designated, you are legally bound to maintain the restricted fund in accordance with generally accepted accounting principles. That's not just a church choice. That's a choice by the state of Maryland, by the Commonwealth of Virginia, by the District of Columbia, and a case I ran into, a major issue in the Commonwealth of Pennsylvania, to the point where, and I'm not trying to send up any red flags, but if someone has given, like, say someone or a group of people gave $500,000 or $1 million to a permanently restricted endowment fund, and your institution starts to spend that, that's actually against the law. That becomes a misappropriations issue. And there's another even worse word I'm not going to use. I'm not going to say malfeasance, but don't worry about that. It wouldn't get that bad. But you're bound by law. That's just the way it goes. Now, a word about the word endowment. The word endowment, lowercase e, means someone has given you money, period. There's really nothing more to that definition. Capital E is the way your institution defines your church's endowment fund or funds is up to you. Endowment, the word, be careful, the word endowment usually implies to the donor that they're giving to a permanently restricted fund, meaning the $5,000 or the $100 or the $10,000 gift they're giving, you are going to maintain into perpetuity. You cannot spend that. And that the way you manage that, that's a different topic. But be careful with the use of the word endowment, and be sure there's really good clarification on the part of church management and the part in which you communicate to your members of your congregation.
Thanks, Patrick. That's helpful. And that leads to sort of our next question. The question as submitted was, how can the finance committee support the treasurer in their duties? I might also tack on to that, if you have an investment committee in your congregation, what's the interaction between an investment committee and a treasurer, or what is appropriate interaction? Steve?
I guess I would sum it up this way. The treasurer, the bylaws of your church will establish what the treasurer does, but it's pretty much managing the finances of the church. The finance committee, in my view, is more financial planning, budgeting, maybe being involved in a capital campaign, planning that, the kind of a business plan, and clearly the budgeting process goes, which normally would go through the finance committee. An investment committee, again, has a different kind of task, and that is trying to maximize the return on whatever money is in your endowment or your investment account. So I think that the finance, I mean, I must say at our church, we're relatively small and we don't have a very active finance committee. But it kind of kicks into gear every year around budgeting time, and that's when they perform most of their function.
Could I just tack on to that too, Steve, that as a treasurer, you're responsible for reporting information, accurate information, to the vestry and the wardens and the rector and the congregation. And you're responsible, to know that what you're telling them is the true financial position of the church. The finance committee actually figures out what to do with the money and how to spend it and set priorities or visions and that sort of thing. That's really not the responsibility of the treasurer. The treasurer, I had a friend once when I was treasurer, and I was stressing about, oh my God, this financial situation. And he said, you are the messenger. That's what you are. You're the messenger to the finance committee or the parish as to what's happening. You're not responsible for what's happening, but you are responsible for giving them accurate information to make decisions. So,
Penny, I think that's helpful. And I think it's also helpful to remember that you as the treasurer, unless you are working on annual giving and stewardship, it's not your responsibility to generate resources or to raise money. That's not your job. Unless you're working on stewardship, then that's a different issue. So I think it's helpful to keep that in mind.
Well, that's also why you need to have this separation of duties a little bit. And I know we're a church and, we like to think that way, but we also have to be cognizant of separating duties so that protects everybody from any sense of impropriety along the way. And you don't like to think about that, but it's just something that an auditor would be looking for in an audit, make sure nothing, everything is up to speed, or, no checks that were written that shouldn't have been written. So when you separate the duties, you have more than one a pair of eyes looking at each thing that's going along, and it's self-protection for you and the church.
I would add to a word about audits. One thing about audits that I think is often overlooked is that audits are meant to be useful to you in making sure that things that went wrong, either from error, just I messed up, or from something that is more akin to fraud, that those things are located before it gets out of control. So, I could tell you many, many stories of congregations, not in this diocese, but of congregations of all denominations all over the place, who have a very kind church treasurer or church secretary who have been stealing money from the church for 25 years, right? And an audit is meant to help keep that from happening. An audit is also meant to be a learning experience to say, our internal controls, our separation of duties are not actually very good here. So here's an opportunity for us to improve so that we can be better stewards of the resources that God has entrusted to us.
Let me back up exactly what you said, Jordan. An audit is supposed to be a helpful learning experience, as well as a project in which you accurately state your periods, meaning a year, income, revenue, money in, money out, as well as your balance sheet at the end of the period. An audit also should help the church look at all of their internal controls and recommend improvements or changes to the controls, as well as the accounting practices. So if you have an auditor that comes in and out, I don't mean to start preaching here, that comes in and out, looks at your numbers and says, here's your report, pay me goodbye, then you really haven't gained much. You got some adjustments, but unless it's a helpful working experience, you really not have moved forward very, very well.
And if you have an auditor right now or an audit relationship wherein you have what Patrick described, someone says, here's a piece of paper, pay me, that's not helpful. And you can contact the diocese, you can contact me, you'll have lots of contact information at the end of this, and we can help you find someone that will do for you what we are describing, that you can engage to do something that's productive for you and for your congregation. So please don't hesitate to reach out to us because we can help you with that.
Hey, Jordan, also, it's not something you want to do every year, but I know a lot of churches are struggling financially. You can also do a peer audit. It's the business manual has a very detailed audit section. Now you have people outside of your parish and someone in there, and they basically do an audit going by all these checklists. Patrick, don't get too upset with this, but it is effective for smaller churches. Maybe you want to do that this year, but have an auditor come next year, because we don't want people to say, well, we can't afford an audit. So there are other ways of, garnering your resources to make it happen and still get a good product, not one that Patrick would do, but enough that the diocese would accept.
Right, that's
Yeah. Particularly for small churches with limited resources, I certainly understand taking that as a first year approach, or maybe a first 2 years approach.
Well, I worked with a church and they did it for about 3 or 4 years. We did a peer review audit, and then the next year they had an auditor come in. Did that about 3 times, and then they were on a better financial footing, and then they're off and running with, professional audit each time.
We have a question about records. Is a Google Drive account secure enough to store electronic copies of documents whose paper versions we keep in the locked file cabinet in the church office? Things like bank account statements, and pledge records.
Let me say, Penny, I don't know, but I do know that my Dropbox Premium, I am told by the IT world, has a certain degree of security that regular Dropbox and regular Google does not have. That's all I know. Penny?
I don't know the answer to that, because I don't know.
I don't know.
It's a good question, but.
Well, security is a loaded term. It depends on what we mean by security.
It does. But I would encourage you and your congregation to think about how to maintain records, however you choose to do that, both for the purpose of being able to conduct an audit in an efficient way without running around looking for a million things in the last possible moment, but also for succession planning. You are a treasurer right now, but you probably do not want to be the treasurer of your congregation for the next 57 years. And so at some point, there will be someone who will want to know what you're doing, and you want to be able to give them something that makes sense and is easy for them to follow. A question about peer review audits. How long can a congregation survive on a peer review audit? I think the question is, are we able to do this for a long time? Is that canonically acceptable?
If I might chime in, that depends on who's the skill levels of the persons doing the audit. And if you have a congregation that has a few financially focused, acclimated people, or maybe an accountant or two in your congregation who's on that committee, then I'm going to speculate and think you probably are covering most of your bases. Someone, or even an accountant or a bookkeeper of some type, who, interestingly enough, and some of you might have experienced this, you might have a very qualified CPA in your congregation who really doesn't want to be involved. That's very frustrating, but that happens. But once again, it depends on the skill levels and the extent of the quality of the review itself. Whether or not it satisfies canonical requirements, I'm going to defer to Steve and Penny on that.
Well, on the canonical side, the canons of the Episcopal Church and the canons of the Diocese of Washington require annual audits. The Finance Committee looked at this question of affordability a few years ago, and when Paul Cooney was active in the diocese, concluded that, I can't remember what term they used, but it was basically the self-audit was acceptable and fulfilled the obligation. So from a canonical point of view, a self-audit is acceptable. And I think we really are most interested in having churches do audits. So there are, believe it or not, churches who have not been submitting audit reports to the diocese. And that hurts the churches as well as, not being in compliance with the rules, because the churches, it indicates that churches are not seriously monitoring and taking care of the financial side of their mission. So the audit, as Patrick has pointed out, is beneficial to the parish in many ways. And I've encountered some resistance on the part of the vestry saying, oh, this costs so much money and our books are clean, why do we do it? We do it because it's discipline. As a mentor of mine once said, for the sake of good order. And therefore, I would encourage everybody to do your audits. We know they don't come in on time. We know they may not be done by September of the following year. But the important thing is to do it.
And once you get in the habit, if you haven't done one before, once you do the first one, you get over that scared hump of what, holding your breath and what's going on and the whole mystery of the whole thing. And it becomes ever so much easier each successive year once you get a good clean one to start with. So anyway, it's good practice, just good basic practice. You want to know what you're sharing with your congregation is accurate.
Yeah, and then shopping for an auditor, talk with them at length as far as what's going to happen, what you feel you need, what's your current situation, what you feel you might need. Have some extensive dialogue and let the auditor go, well, let's talk about, you're here at this point, at the end of the audit, we might want to accomplish this and this and that and that and that, and be at that particular point, and have him or her walk you through steps that you're typically going to go through. Once again, an audit you should not feel threatened or intimidated in any way by your auditor or your audit firm.
There are two additional benefits from an audit. One is protection of the treasurer, and the other is assurance to the congregation.
Thank you, Steve. That's helpful. As our last question before we wrap up, to whom do we send audit reports?
Church house.
Church house. Answer for everything. Jesus or church house?
I would assume Andrew Walter to start.
But they do go to church house and then they'll know what to do with them.
Mm-hmm.
Andrew Walter is the new canon to the ordinary, and we'll be glad to receive those from you. Paul asks, this really will be our last question. How much do audits normally cost?
It depends on your approach. If you're doing a peer review, though, are they free? I guess they're free. But I'll using me as an example. If a very small church will be in around about 4,000. A larger church, I think the most I've ever charged for an audit, for a 1-year audit, was just north of 5,000. So look in the 3,500 to 6,500 range. If you're real small, you could, and if you have a really limited budget and you're really concerned, but you want to have an audit, talk to your auditor and negotiate. That's another thing. That's a negotiable item.
And the better better information you can give them, the better chance you have of making it a little bit less expensive. If everything is really in good order, that would help also, I'm sure.
Mm-hmm.
And thanks to Kathy for your chat, for reminding me of the term. Special procedures was the terminology used for the audit alternative. I never quite figured out what it meant, but that was the terminology used.
And Bill has a helpful point: to ensure that your engagement letter from your auditor covers all the services that are agreed to. That's an important point, that an engagement letter is sort of your contract with your auditor that says this is what we're going to do. And so making sure that you understand everything that's covered in that. And as Patrick pointed out, if you are interviewing an auditor or seeking to engage one who is not interested in talking to you about what's going to happen, then you need to move on, right? That's not a person that's going to be
Right.
helpful. Because
Yeah, if they say, oh, we're going to come in and do a standard, audit according to standard audit procedures, and really don't want to describe or do anything beyond that, I would see a red flag, because that means they're going to come in, evaluate what you have, issue a report, and perceive themselves as done.
Okay, so thanks to everybody who chatted questions beforehand or during the workshop. I'm going to close us up now. So let me remind you, all of us have mentioned this a number of times. So directly after the workshop ends, you will receive an email to the email address that you used in Eventbrite to register, that will contain a link to a Google Drive that has the online resources that we've mentioned. And you also will have access to the four of us, our contact information, and you are welcome to contact us. And then if we don't know the answer to your question, we'll send you along, but we won't leave you. Okay, so we won't leave you hanging. Your email will be read and addressed. So please know that and feel confident about that.
Jordan, could I just jump in here for just a second? If you're really stumbling about something, there's a Diocesan Finance Committee that's here to help you along the way. Steve, you want to tag in on that one, but the Finance Committee is, available.
Yes. Our basic mandate is to deal with encumbrances of church property. But we also want to be able to reach out and help parishes with their financial systems and accounting. Mm-hmm. So I use the term technical assistance. We're not going to come in and do your bookkeeping. We're not going to come in and set up your accounts, but we will come in and do the kinds of things we did in this training today. Talk about what you ought to be doing. Talk about how you can better do something. When there is a transition, rector transition, a finance committee person normally is involved at the request of the pastoral side of the diocese to make sure that things are in order. What would a new rector find when he came in or she came in? So we do play a role on a volunteer basis. Individuals from the finance committee will go out and work with churches, as I say, providing the kind of technical assistance and insights that we provided today. We're not substitutes for auditors. We don't attempt to be, but we are willing to provide some advice.
Thank you. That's helpful. So I'm going to close us with a prayer, and then we will look forward to your email. If that would be helpful to you, please do feel free to be in touch, and don't hesitate to do that. This is a stewardship prayer attributed to Thomas Merton. Almighty God, we thank you for all the gifts that you have given us, our lives, our loved ones, all that we have and all that we are. Most of all, we thank you for Jesus, your Son and our Redeemer, who came among us to show us the way to life. Jesus was the perfect steward of your gifts, showing that complete trust in you is necessary, and that giving of self is the most important part of following him. May the offerings of our time, our talents, and our resources be made in the same spirit of sacrifice that Jesus taught us by his life, death, and resurrection. Amen.
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 Peace be with all of you, and do be in touch if we can be of help. Bye-bye.
Thank you.